Ladies and gentlemen, good day and welcome to the KPI Green Energy Limited Q4 and full year FY25 earnings conference call, hosted by Share India Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harsh Patil from Share India Securities. Thank you, and over to you, sir.
Hello, good evening. Thank you, and good evening, everyone. Congratulations on a very good set of numbers. On behalf of Share India Securities, I welcome you all to Q4FY25 earnings conference call of KPI Green Energy. We are pleased to have with us the management team represented by Mr. Sohil Daboya, the Whole-Time Director, Dr. Alok Das, Group CEO, and Mr. Salim Yahoo, Chief Financial Officer of the company. We will have the opening remarks from the management, followed by the question and answer session. Thank you, and over to you, Ritvik.
Hi, good evening, everyone. This is Ritvik Chauhan, AGM Investor Relations for KPI Green Energy. I'm pleased to have everyone join us today to go over KPI Green Energy's very strong quarter for Q4 FY2025 and full year 2025 results. Just to give you a brief overview, we have, in addition to the 950 megawatt of renewable energy already commissioned, added another 2.6 gigawatt of orders in hand. Our financial results in terms of revenue, PAT, EBITDA have all been tremendously successful. So I'm really excited to have our management talk you through those numbers today. I first want to introduce our Group CEO, Dr. Alok Das.
Good afternoon, everybody. I'm very glad to share some of the information. I think what Ritvik has already told that what is KPI numbers. And today, actually, while we, the KPI Green, is leading through a renewable energy space, you know, the market is very dynamic, and the growth of this renewable energy initiatives, both for wind and solar, are very, very encouraging. And while going through, you can know that in India there are total 500 gigawatts are there, and almost 220 gigawatts is completed. So probably market demand is more than 40 to 50 gigawatts per year, and there's a conducive policy prevailing. So we have the right path while going forward to harness the renewable energy and for the society as a whole. And I think that is what we can to deliberate some new kind of projects is also coming up. So during conversation, we can share that also. So with this, I can hand over to our group, to our CFO, Salim. Please.
Thank you, Doctor. Good afternoon, ladies and gentlemen, and thank you for joining KPI Green Energy Limited Q4 FY24-25 earnings call. I'm Salim Yahoo, I'm Chief Financial Officer, and I'm delighted to report that in Q4 FY25, we have delivered yet another record quarter with a total revenue of 577.80 crore, up 97% year-on-year from 292.97 crore, driven by accelerated project execution and higher capacity utilization. While EBITDA rose 76% to 169.43 crore on the back of improved operating leverage and cost efficiency. PBT, that is profit before tax, rise to 131% to 138.70 crore, thanks to our strategic debt repayment, reducing finance costs, and profit after tax climbed 142% to rupees 104.18 crore, underscoring a disciplined financial management for the full year FY25. We achieved total revenue of 1755.16 crore, a substantial increase of 70.3% over 1030.82 crore. Again, EBITDA of 580.87 crore, up by 69.1%, and profit before tax of rupees 440.90 crore, 103% rise, and a PAT of 325.28 crore, up by 101%, reflecting the strength of our project pipeline and robust demand for clean green energy. Various other things that we have achieved other than the finances. During the year, we successfully raised 1,000 crore through a qualified institutional placement which include some of the marquee institutions, including Morgan Stanley, Goldman Sachs, Society General, BofA, Motilal Oswal, strengthened our credit profile. It also upgraded our rating to ICRA A positive, secured a landmark EPC contract of 300 megawatt AC from Coal India Limited, 100 megawatt AC from Mahagenco, all on track for early commissioning. And on the technology side, and advanced our network operations to deliver 24/7 monitoring and predictive maintenance that has lifted fleet availability to 98.5%. While moving on to other states, we have signed MOUs with states like Odisha, Rajasthan, and Madhya Pradesh to set stage for a larger scale solar and hybrid projects. As you all know, we remain committed to the disciplined capital allocation and further delivering in year on year. Thank you, everybody. Now I open the forum for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wish to ask a question may press star and 1 now. The first question is from the line of CA Garvit Goel from Invest Analytical Advisors LLP. Please go ahead.
Hi, am I audible?
Yes, sir.
Yes, Garvit.
Good evening, sir. Congrats for a decent execution. My first question is on CPP part. Given that the CPP currently contributes 87% of the revenue and tend to offer the higher near-term EBITDA margins due to faster execution cycles and low capital intensity. So how do you expect the overall margin profile to evolve as your IPP portfolio scales to over 1.5 gigawatt, and we are also talking about BESS project begin contributing. Specifically, so can you help us understand the margin differentials between the IPP, CPP and BESS in your operating context, and how the shift in the business might structurally impact the consolidated margins in FY 26 and 27? So that is my first question.
All right. So, Garvit, if you see this year, our total mix of revenue from IPP and CPP was 13% and rest all 87% was the CPP. And the margins have slightly improved compared to last year because of the stability. Now, as we go forward, you must have seen our presentation also that we are going to install 1.5 gigawatt of IPP capacity. Now, this will take a year or a couple of years. It will go in a phase-wise manner. It will keep on adding to the IPP side. Our final goal is to, at least take this to 25%, IPP portfolio to 25%, and the remaining to a CPP portfolio. With that increase, naturally the margins will improve because as we all know that IPP brings in a strong EBITDA margin, around 85 to 90% kind of margin it can reach up to, and the CPP brings around 20 to 22%. The combined EBITDA margin would be around 32 to 33%. So as we go forward, if we add more of IPP, naturally the margin will shift to a stronger position compared, but it depends upon how much a portion of CPP simultaneously gets added. But our goal is to add more and more of IPP as we increase the CPP also.
Thank you. Participants are requested to restrict their question to 1 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Rajat Gupta from Rajat International. Please go ahead.
Hello everyone. Am I audible?
Yes, sir.
Yes, Rajat, you are audible.
Yes, thanks for the opportunity and congratulations for the fine set of numbers. Sir, my question is addressed to Mr. Salim Yahoo. There is no debate that we have attained commendable numbers and very commendable growth. But it seems like from the last 3 years, we are attaining the growth via either liquidating the equity or raising the debt. So it has started to look to in the depleting ROC and ROE as well. So in this quarter, we are seeing the EBITDA margin is slipping as well. So can you hello?
Yeah, Rajat. I got your question, Rajat. First of all, thank you for the congratulations for the results. Let me give you a perspective that, when you look at our results, you are looking at the ROC, ROE, decrease in the ROC. But it is not because of the performance decrease, it is because our net worth has increased substantially with the QIP offset. And understand, you are saying diluting. But you need to understand that we are into a business which is a very capital-intensive business. The IPP segment is a very capital-intensive business. And for that, we require huge funds which are required to build up the assets. Now, these assets, long-term assets, 25-year assets. So you are getting an annuity income of 25 years, which you are infusing into the, the asset base. So that is a very, I would say as an investor, if I had been an investor, I would always like to have a long-term annuity revenue. And that is what is coming into our business. As we go on, we add more and more assets. It will strengthen our profitability margins and everything. The drop in the ROC or ROE this year was because of the infusion into the equity, or you can say the net worth. And you have to also see that the debt equity has substantially improved. Last time it was around 0.5. It has come to 0.33, which should also give a comfort that, whatever amount of interest that we were paying earlier, we have reduced that also. So overall, it is a good, because see, until unless we show a growth, it is not, and the growth is going to come from infusion of funds or adding more and more assets. Because CPP will bring to us some extent profitability, but beyond that, it is IPP that is going to drive the future in the renewable energy. So that's the reason we have taken a cautious call, but we have not gone we are not overdriven by increasing too much debt. In fact, debt has reduced compared to the last year if you look at the debt equity ratio. So this is the nature of the business characteristic, where you will have to infuse, if you want to grow, you will have to infuse more and more IPP so that you get a continuous income. That is more important.
Thank you. The next question is from the line of Rohit Singh from Invest Analytics Advisory LLP. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah, Rohit, you're audible.
Sir, you talked about improvement in the EBITDA margin. So I would like to ask two questions. One is, what is the guidance for next year? And whatever the top line that we are looking to grow in FY 26, and if the IPP contribution is on the higher side, so that means the bottom line is going to be outperform in the terms of as compared to top line?
See, as far as next year is concerned, we have already multiple times our CMD, Chairman Dr. Faruk has also given that we are committed to at least 60 to 70% growth year on year. And we have done this year. We are very positive that we will go improve the same in the next year also. IPP, yes, IPP we have already got 1.5 gigawatt as I told you, which is under the pipeline of execution. Now this will come into a phase in a phased manner. So we see to that is 1.5 gigawatt will totally be operational in next couple of years. So you can see from the third year, you can see the revenues of IPP of this IPP flowing strongly from the third year. So if you can say like, FY 25, 26, 26, 27. So 27, 28 will be the first full year where we will be able to get the entire 1.5 gigawatt revenue. But there will be simultaneously, as we keep on adding capacity, there will be some portion which will get energized and will start flowing in the revenue. Naturally, if I add more and more IPP, my EBITDA margin will also improve, my PAT will also improve. But we expect this major impact coming from the third year onwards, where the entire 1.5 gigawatt and something new which will be setting up, which will be. But we will be able to maintain our margin of 17 to 19% kind of a margin at a PAT level.
Thank you. The next question is from the line of Russell from Concall. Please go ahead.
Hello.
Yes, sir. Hello. Audible.
Yeah, congratulations sir for a great set of numbers.
Thank you, Russell.
So my question is that in the EPC part, since we have seen one of the players, has been filed for the NCLT. So do you think that, the competitive intensity in the EPC segment has reduced and the pricing segment must have improved, and we might also get some order, if from them, if that order is pending?
See, Rachel, as you were saying that one of the company player has moved out of the race. Nevertheless, whatever orders that particular entity has taken, it will come back again into the market for some others too. We are one of the players who have, at present I have PPB order book of 2.20 gigawatts, which is quite comfortable for our installed plus upcoming. So 1.7 is the new order book that already have, which is quite big compared to what I'll be executing, and we are adding more and more. Naturally, the new orders will get added to it, but everywhere you have to see at the two things. One is that the execution capability of the entity, which in case of KPI is almost more than a decade of experience in executing wind as well as solar and hybrid projects, which is a plus point for us. And majority of the places we have that our capability helps us to go at a very competitive prices when it comes to a tender bidding and all that. So naturally, yes, we will be adding more and more of this and competitive market, because still there are a lot of players who are bidding for it. The test is about who will be able to execute within the timeline that is given.
Thank you. The next question is from the line of Ashish Rampuria, who is an individual investor. Please go ahead.
Thanks and congrats for the result again. So my question, also sort of, Farooq also gave a couple of interviews post the result, right? And he spoke about that all the current order books should get executed within this financial year, right? At least that's what he spoke about. Maybe the entire IPP might not happen. I am just trying to understand the order book and pipeline for FY27 and something like FY28, right? Because actually we are talking about 60 to 70% CAGR for the till FY30. So do we have any visibility beyond FY26? Because FY26 is sorted, right? So beyond that, if you can throw some color for us. And also, I think linked to this question before the person stops me is, in that India map where you have shown sort of Odisha, MP and Rajasthan, you also shown, if I'm not wrong, Andhra Pradesh, right? As one of the highlighted states. If you can also talk about that, if there are any plans around that.
First, I will speak about the order book. So if you see that, the order book that we have given, when it comes to the CPP, we have altogether 1.76 gigawatt of upcoming order book that we already have. Other than that, there are also new orders. Some I cannot disclose right now, which we have already won or where we are going to bid. So I think within next 6 months or the next quarter, you will see the increase in the order book, substantial increase in the order book, which will cover the entire FY27 also. So order book is not a problem because the sector is very booming and there is a lot of orders and work which is available for a good player like us. So we are very confident that we will be able to close the FY27 also entire year in first or the second quarter max to max. That will help us to give enough time to close that also. In fact, FY28 also portion will be slowing down because that's substantial. We have already bidded and we are confident that we will close it. Moving on to the opening in the other state, I would request our group CEO, Dr. Alok Das, to just throw some light on this also.
Yeah, glad to know your questions and just about beyond our Gujarat. You see, basically, we have signed up 3 MOUs of the 3 different state governments. One is Rajasthan, another for MP, another for Odisha. So where we are clear cut, we have signed our MOU for execution. And now at present that every state, there is a basic requirement of the renewable projects. There is a creation of resource in terms of power evacuation and land acquisition. So we have already signed a document for land acquisition and PE creation, all 3 states. And all 3 states, administrations are in close touch with us for the resource creation and all. So this will take typically about, if it is a wind-related project, so we have to have some data management and all. It will take 1 to 2 years completely for the data management. And creation of power evacuation will also take equal time, like 1.5 years. So whatever the other states kind of activities will be coming probably after 2.5 years onwards. So that is what 3 states we are just under status of, progressing to other states, what we are planning for that.
Thank you. The next question is from the line of Rakesh Banerjee from RAP Capital. Please go ahead.
Yeah, good afternoon and congratulations for the wonderful set of numbers. My question is on your unit generation. Like when I did the YOY comparison, I found that in this year our unit generation has increased only by 16.9%, whereas in the last few years we have been growing our unit generation by almost more than 40%. So is there any specific reason that the unit generation has slowed down, and what will be the color for the unit generation in FY26? If you can give some color on that.
Yeah. So Rajesh, if you see that, in FY24 we did 21 and this time it is 24.9. We have set up IPP projects in this year, but they were done in the flag end of the Q4. So the generation will come up in the next year. So approximately, if you see, we have given you that entire 1.5 gigawatt, which is going to set up, that will generate approximately 300 crore units per year. So going forward, you will see a substantial growth into unit generation. This year we have added the capacity, but it was throughout the year we had worked on adding the capacity, and it got energized at the end of the month of March. So automatically what happens, the unit will start flowing into, and these are only IPP units, our own plant units that we are counting. That's what we have generated. So next year you will find substantial growth. After that it will be further more substantial growth from what the previous year is.
Thank you. The next question is from the line of Parth Kotak from Plus 91 Asset Management LLP. Please go ahead.
Hi, thanks for the opportunity. Salim sir, I just want to get some color on our CPP realizations. In FY25, we reported a 1,500 plus crore of revenue from CPP on 160 megawatts energized, implying a realization of about 9 crores per megawatt, which is significantly above the standard of 4 to 5 crores per megawatt range. Last year's realization was more aligned with this norm, so the elevated figure this year appears exceptional. Sir, as we look ahead, should we expect CPP capacity addition to outpace revenue recognition, thereby normalizing realization per megawatt closer to 4-5 crores going forward? And if you could also clarify, I'm sorry for the slightly longer question, sir. If you can clarify this year's higher realization includes elements like land, BOS or turnkey EPC that may not be directly tied to megawatts energized. Thank you, sir.
Yeah. But the calculation that you did is not what the calculation we do. See, our CPP business, our billing is done on milestone basis. So there are 10 to 15 milestones for any particular project. Milestone depending upon the supply, milestone depending upon the work contract like filing, installations and everything. So our billing is done on the milestone basis, but we add the capacity only when we energize the entire plant. So there will always be a disparity between what is you cannot directly match apple to apple your top line vis-a-vis the energized capacity. As far as the the range of per megawatt, we are not different. We are not different from what others. So our range is also around the same 3 to 3.5, 4 or crore of per megawatt. That is what on the solar side, and 6 to 7 crore per megawatt around the wind side. So the industry what is doing, we are also doing the same thing. It's only the calculation that is done. It's on milestone basis. So we book revenue. So maybe there is any particular project where we have completed 80% of the project, but the capacity is not added because we have still not energized that project. So the revenue will get added to the top line, but the capacity only when we complete the entire project it gets added. So that's why you are seeing, you're finding it difficult to match it up with that.
Thank you. The next question is from the line of Anil Sarni from Q16 Advisors. Please go ahead.
Hi, am I audible?
Sir, I would request you to please use your handset.
Okay, switching to handset now. Yeah, so I'm curious about the economics of the IPP business. Somewhere the calls I heard 18%. So if you could throw some light, like what are the assumptions? Like, do you get a certain amount of rupees per unit, and what is the cost and what is the debt equity ratio, such that one can get to the equity IRR?
Yes. So, Anil, first of all, we have in our presentation, if you have seen, we have given you an average rate per unit. That's what we have, because it is coming from the actual LOAs that we have. So, average rate per unit is around 3 rupees, which includes hybrid kind of a plant, which includes solar and wind also. All together, that's what we will be earning as we go forward. Moving on to the debt equity, I mean, we usually go with a 75-25, 75% of a debt from the lender and 25% equity portion. So if you look at the average IRR that we get on an any project, it would be around 12 to 13% kind of a IRR for any IPP project when I'm talking about the IPP project.
Is this the total project IRR? I'm looking at equity IRR.
Equity IRR would be around 17 to 18%.
17 to 18%. So if it is like that, would it not drag down the overall ROE? I mean, in terms of what it looks like, I'm aware that 17-18% for 25 years is a very, very good number. But in terms of how it appears optically, what I mean to say is, when your ROE comes down to around 17%, so the blended numbers will, just for an analyst looking at it on a snapshot basis, the ROC, etc., would start looking lower.
So see, the EBITDA margin in this, what we are earning is very high, but when the PAT margin comes after the payment of all the debt and everything, I mean, the IRR that what we earn is around 17 to 18% on the equity. So your return on equity, the reason is that we have to, if you see ROCE, return on capital employed, naturally the debt portion, as I told earlier also, we are capital intensive business. So this will be going forward, will have an impact on the ROCE depending upon what the size or the volume that we will be working with will be huge as we go forward. So, the absolute term, it will be a huge. Percentage-wise, it will slightly move a little bit up or down.
Thank you. The next question is from the line of Ranjil Soni from RRI Investments. Please go ahead.
Hello. Congratulations on great set of numbers. I just have two questions. So the first is, what opportunities does KPI Green sees in battery energy storage system? And so in PPT it was mentioned that KPI would start first with captive and accordingly will participate in tenders. So just trying to understand how does that BES actually works, and is there any BESS mandate for PSU companies? So that was the first question.
Yeah. So, Pranjal, I would request Dr. Alok to pitch in on the BESS because he's an expert on that BESS, battery energy storage system. He'll give you a little bit brief on that.
Pranjal, this is basically what is there because nowadays you can see that renewable energy penetration is coming more. So there is a grid discipline coming into the picture. So during daytime there are a lot of solar pumping is there. And wind is also coming, and there is hydel and other thermal projects are coming. So grid is getting in discipline. So major smart grid concepts have come to India, and now they are telling that whatever extra generation that cannot be disturbed to the grid, and you can store it in terms of battery, and that battery storage should give the load pattern in sync with the demand of the distribution company. So that could be discharged in a particular time. For example, nowadays every state government, because mostly projects are coming on the specific state demography. So now states like Rajasthan, they have come that all the solar projects should come with the 5% BESS mandatory. Well, that means what? So whatever the solar generation they can store, and that will be mandated, and whenever peak time requirement, that battery can be discharged. So now this is coming a very mandatory kind of grid requirement where power can be generated based on the resource available, and when the demand comes asking, then that time it will be discharged. So like the BESS is coming, this upcoming technology which can be used for hybrid projects, both wind and solar just comes together. So that is a mandate is coming for all states together. So that is what the future path, and everywhere all the companies going for the BESS applications. And your second question, what was that, Pranjal?
So we have lost the connection of the current participant.
Okay.
On to the next question. That is from the line of Kunal Mehta from Pineapple Capital Advisors. Please go ahead.
Yeah, hello. Am I audible?
Yes, Kunal, you're audible.
Yeah. So just a couple of questions. Just regarding the IPP business, so 0.2 megawatt of the GUVNL. So do we plan to commission this project in phases? and start generating revenue phase by phase, or it will be totally at the end of the year when the entire 1.2 gigawatt is energized? That is one. And secondly, out of the 1.76 order book gigawatt in CPP, what is the plan? How much can we energize in the current year?
Okay. So, Kunal, on the IPP side, if I give you the project that we have already uploaded on the, BSEA websites also, that, we have 50 megawatt hybrid, we have 250 megawatt solar, we have 370 megawatt hybrid. So these projects will come in a phase-wise manner as we start completing. Like 50 is already completed, 250 will be completed, then 370, then another 150. So in a phase-wise manner, depending upon the LOA or what is the PPA that we assign, it will come into that. Not altogether 1.5 will come on a one fine day. It will be in a phase-wise manner. The second question you asked was on the CPP, right? Hello? Hello, Kunal?
Yes, sir. Mr. Kunal? So he's connected.
I think you're lost. Yeah. So second question on the CPP side, the 1.76 gigawatt, majority of that will get executed this year itself, and a part will flow down to the next year.
Thank you. The next question is from line of caller from Anuja Properties. Please go ahead.
Hi, my question has already been answered. Thank you so much.
Thank you, Gaurav.
Thank you. The next question is from the line of Hardik Gandhi from HCMG Shares and Securities. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes. Yes, sir.
So congratulations on a absolutely amazing set of numbers. Just wanted to know
Thank
some
you.
economics about the IPP. I know a majority of the questions have been around that, but just to quantify, if I were to start 1 megawatt of IPP, how many units will I generate in a year, and what is the decline over the period of the next 20 to 25 years, given that there is a depreciation in the output?
Yeah. See, 1 megawatt IPP, you will generate units approximately 15 to 19 lakh units, depending upon whether it is tracker based, whether it is a fixed base, and all those, different factors, and the panel that you use, all those things. The degradation would be at around 0.42% year on year for the next 25 years. That will be the degradation.
Thank you. The next question is from the line of Vaibhav Lohai from Commercial Flights Movers. Please go ahead.
Thanks for the opportunity. So I wanted to understand two things. So how are the margins shaping up for the CPP segment for the new bids, and how is the payment collection efficiency right now? Like, are you facing any delays or something?
With the CPP segment margin, as I told you, it's around between 22 to 22%. And as we go forward, if we get into more utility scale, it will be in that range or a little bit of from 18 to 20%. Payment has never been a problem. We also get advances in these cases if we furnish with the ABG and all those things. So we are able to get our payments on timely manner and execute the project also in a timely manner.
Thank you. The next question is from the line of Manoj Nath, who is an individual investor. Please go ahead.
Hello, sir. I have three questions. Sir, are we trying to enter in green hydrogen through KPI Green, and by which year will the same will show in our revenue total? Are we currently trying to enter into any international contract? And what is the KPI Green target of installed capacity till FY 2030? As in presentation, only KP Group 10 gigawatt target is mentioned.
Fine. Manoj, on the green hydrogen, yes, we are going to get into the green hydrogen segment. And as you know that if we want to get qualified or want to bid for that, we would require a strong entity. So as KPI being a strong entity, we might use KPI Green for getting into green hydrogen also. Though we have a separate entity for green hydrogen, but there will be a support required from the big brother of the group, you can say. On the international side, we have already opened an office in Saudi Arabia, and we are also in discussion with other countries. So we are checking into that. What are the we would like to go with an EPC or an EPC kind of model, and then slowly as we establish ourselves, we will go into an IPP mode. Moving on to the target of FY 2030. As you are aware that 10 gigawatt is at a group level that we have, we have given. But looking at the way we are going, I think more around 60 to 70% would come from KPI and subsidiaries. Okay. And we might surpass also this target depending upon the way it is moving on.
Thank you. The next question is from the line of Jitendra Ranga, who is an individual investor. Please go ahead.
Hello.
Yes, sir, you are the
Am I audible? Yeah. First of all, congratulations on this solid result. I have queries related to IPP revenue share in the overall revenue mix. So I find your presentation financial 25. Total IPP was like 13%, which translates to 225 crore of revenue. And for financial 24, it was 17%, which translates to 174 crore of revenue. So as per latest presentation, current IPP portfolio is 500 megawatts. So will it translate to around 600 crore of revenue for this year, or full plant will not be commercialized yet?
It is 503 megawatt if you calculate, which includes my existing 170 and the new 240 Howrah that we have energized, another 50 megawatt which we have energized. So we expect that the revenue will grow up to we will add a realization of around 50-60 crore on the other sides also. So you can see that it will go up to 350 to 400 crore this year. If we add more this year and we start the plant early, we will add up to 500 plus kind of a thing.
Thank you. The next question is from the line of Suman Kumar, who is an individual investor. Please go ahead.
Hi. Am I audible to you?
Yeah.
Hello. Am I audible to you?
Yeah. Yes.
Yeah. So this question is to Mr. Salim. Some on IPP, and given that the blended ROC is at around 17 to 18%, which means that if we are targeting to grow at 60 to 70% growth over the next 2 to 3 years, does it mean that there will be shortage of capital and hence we'll have to raise capital either through debt and equity? And hence, although the growth, overall profit growth would look like 60 to 70%, but in terms of EPS, if the capital was to be funded by raising of equity, then probably EPS would be far more weighted than the 50 or 70% growth that we are looking at in overall net profit.
Yeah. Suman, the 1.5 gigawatt of IPP what we have shown in our presentation and all, for that equity is already tied up. Whatever funds we have raised and internal accruals that we have earlier, those are kept aside for increasing the IPP portfolio. So now the 1.5 gigawatt is going to happen in the next couple of years. Once we complete that, after that we'll look into whether going further into the IPP segment after a couple of years, we will look into whether how much is the more addition to the IPP, and at that time only we'll be thinking of increasing the equity portion. But the debt we have already factored, for this 1.5 gigawatt, and accordingly we have already got an in principle sanction from majority of the lenders also. So EPS will not fall down because we are not adding any more equity portion or raising an equity for this 1.5 gigawatt.
Thank you. The next question is from the line of Nitesh Vora, who is an individual investor. Please go ahead.
Yeah. Hello. Hi. So last year, in the last Concall, there was discussion that SBI had that collateral pledging that we had in discussion to have that removed to get it back. What about the progress about that? And the second question regarding the trade receivable, it is we see that it is consistently increasing. Anything about some light on that?
See, I didn't get your second question. What is increasing again?
Trade receivables.
Trade receivables.
Yeah.
Okay. So first of all, on the pledge side, let me explain you that the pledge which was given to SBI, they have already given a letter. They are already working on it because since we are one of the, all our proposal goes to the SBI board, so it has to pass through a process which is set up by them. So we are awaiting their confirmation on that. So we expect that to get covered as early as possible and close it. As far as trade receivable is concerned, I think receivables have improved. If you see the number of days, we were at 150 plus kind of a receivable days, we have come down to 120. So that is a substantial improvement in the receivables. Yes, it's only the number, if you see absolute term, that might, because the growth has gone substantially. If you compare it with the top line, then it is improvement into the trade receivables, you can say.
Thank you. The next question is from the line of Manav Agrawal, who is an individual investor. Please go ahead. Mr. Manav, I would request you to unmute your line and speak, please. Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Sanjeev Madra, who is an individual investor. Please go ahead.
Good afternoon, sir. It's really heartening to see such good set of numbers once again beating the expectations, and congrats to management for it.
Thank you.
My question is on battery energy storage system, which is for first time complete in your earnings presentation. Sir, has the company participated in tenders for battery and offshore, and for what capacity and amounts? And will it be battery energy storage system be manufactured by KPI Green itself, or it will be tying up with some manufacturer for another company for its manufacture? What kind of role basically will KPI have in it?
Yeah, I want to take in here, Dr. Alok speaking. So basically, battery energy is coming up, and KPI is planning to enter the field. But if you know, because there are certain technicalities are there, we are in the process and explore the market, because there's the policy is there. So KPI is planning to enter this field. We are developing the proto model and other thing. So after having developed everything, then after that we can see that what is the market demand and all, accordingly we will plan. But yes, this type of diversification we have some planning for that. Regarding your second question of offshore, we are already in the planning to this stage, and we have certain development is already going on. And you know that offshore there's a policy are in place, and governments are declaring certain resources. So at the time of in future, when it is coming in the policy forefront and everything, at the particular time, we will disclose the same. Thank you.
Thank you. The next question is from the line of Soham from RV Investments. Please go ahead.
Thank you, sir. What is the revenue potential of this 1.76 gigawatt of CPP order book?
See, 1.76 gigawatt, if you see, these includes order where we have the entire scope, whether it is panel, whether it is windmill, everything under our scope. There is also other utility scale projects where the key component like panel or windmill will be in the company scope, not our scope, the developer scope. So it depends upon different projects to specifically mention that, what kind of total per average or something, but altogether, the order book can go above 3,000 crores.
Okay, sir. Thank you.
Thank you. The next follow-up question is from the line of Pranjal Soni from RRR Investments. Please go ahead.
So my question is, when will the IPO of Sunrux Energy be launched?
Shortly, ma'am. I mean, we already have things. We are in the phase of applying also to the main board. We are also discussing on that. Just waiting for some things to improve, the markets to improve a little bit, because we want to be successful. Doesn't want to get into troubled waters. We don't want to introduce ourselves. We just wait for the water to still down, and then after that we will come up with an IPO. We have done that in the past, and we will surely not let you down this time also.
And what tentative time like?
Sorry, ma'am?
Tentative time, like 4 months, 6 months?
See, I cannot give you a tentative time, but most probably we have plans to by end of this financial year, we would like to come out, depending upon the various other market sentiments and factors which will drive our decision.
Okay, and just wanted a clarity on that. Initially, you told now that the 5% BESS mandate is in Rajasthan. So in Rajasthan, it is mandated or it is going to be mandated?
No, it is under the present policy which is declared in the last month. It has been mandated that whoever is going for the solar investment, so for the 5% base diesel, that embedded facility to be provided.
Thank you. The next follow-up question is from the line of CA Garvit Goyal from Invest Analytical Advisory LLP. Please go ahead.
Hi, thanks for the follow-up. Sir, just want to ask on the outlook in respect of the further order inflows that will drive us to FY27 and onwards. Because looking at the current order book, we are pretty much confident, and you are also providing the guidance for FY26. But if you can put some color on the order inflow that we are expecting in FY26.
Yeah, I just answered this question a couple of minutes back, but just to highlight that, we already have, bid pipelines where we are confident we will be winning those pipelines. So I think by end of first or the second quarter of this year, you will be able to see that the entire FY27 will be booked.
By the end of what, sir?
By the end of first or second quarter of this year, you will see that the entire order book will be further going up because we have a lot of in the pipeline, and we are very positive that we'll be winning these tenders.
Got it. Thank you very much. Thank you.
Thank you. The next follow-up question is from the line of Rajat Gupta from Rajat International. Please go ahead.
Yes, thanks for the opportunity. My question is, until when we hope to start generating the free cash flow, and what shall be the capex this year, and what shall be the possible source of that capex? Thank you.
So, free cash flow, if you see, this year also we have generated positive cash flows, okay? And as far as the capex is concerned, approximately around 4,000 odd crore of capex is expected to put into the IPP of 1.5, which will be in the phase-wise manner. This year a portion will go, and next year some portion will occur.
No, this year I don't think we have free cash flow, sir. Is it?
We have 200 crores of free cash flows if you see the cash flow statement.
That shall be the net cash flow, perhaps, but the free cash flow. That means
that's for the operating. If you see the operating cash flow from operating activities, 208 crores this year we have done.
Yes, but that's already infused with the working capital requirement, and we have already liquidated with the QIP. That is also invested and infused with the working capital and capital expenditure.
If you see, cash flow from investing activities is 1587. That is major investment in the IPP plant. And cash flow from financing activities, the QIP and everything is 1,806 crores. That is a separate cash flow. And only from operating activities we are seeing. So if you see the net increase in the cash and cash equivalent has been 427 crores. If I add the opening of the last year, so altogether we have 597 crores of cash and cash equivalent at the end of the year.
Thank you. The next question is from the line of Nishan Kotkal, who is an individual investor. Please go ahead.
Good evening, sir. Congrats on the strong set of numbers. My first question was a little technical. So if you see, in our presentation, you said that we produced about 25 crore units, and our realization was about 3 rupees 8 paisa per unit. So that would get me to about 75 crore of revenue.
No. I'll just explain you. We have 170 megawatt of plant where we have signed PPA with C&I customers. That is corporate and industrial, which includes some of the top names like L&T, Colortech, UPL, Tata Motors, Indian Air Force. These PPAs are differently designed. They are like, whatever unit rate that company pays, we will give them 7 to 8% to 10% discount on. So in those PPAs, I am earning 8 to 9 rupees at a gross level. And the other PPAs I am doing with government, there I am earning 3 odd reports. So that's why if you see that's a huge jump that we see in the unit vis-a-vis the revenue from those units.
Right, because it seemed to be like a mismatch. And second thing is in a long-term vision, when we are looking at 10 gigawatts, how much do you see this coming from out of Gujarat?
The majority will be from Gujarat because we are facing Gujarat. We are one of the leading player in Gujarat. But I think at least 40% who should come, 30 to 40% should come from out of Gujarat. Like state like Odisha, Rajasthan, Madhya Pradesh, where we have signed the MOUs, and Maharashtra also.
Thank you. The next follow-up question is from the line of Rohit Singh from Invest Analytical Advisor LLP. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, Rohit, you are on.
Sir, you mentioned we are going to receive big orders in Q1 and Q2, which will drive the growth for FY27. So can you put some color on in which area are these orders going to be and what kind of margin profiles are we expecting from these orders?
See, these are utility scale projects where we call it as EPC or a CPP business that we are going to add. IPP is already tied up, so 1.5 new IPP is going to come. And the margin would range in the range of whatever we are looking at 15 to 18% at a utility scale project. And this will be majorly from either any big government entity or some conglomerate.
Got it. And for next year, we are going to execute IPP contracts. So can we expect a further improvement in net margin in FY26 over FY25?
No, as I told you, naturally, the moment I energize the IPP contract, IPP plant, and it starts generating revenue, the IPP EBITDA is around 85 to 90%. So it will naturally strengthen my margin as I keep on adding more and more. But only that there is a mix of IPP and CPP. So CPP is EBITDA is lower compared to IPP. So automatically they get diluted, and overall EBITDA what I get is around 30 to 33%. So the more I add IPP, naturally it will strengthen the EBITDA and the PAT. The more I add CPP, it will little bit reduce the margin to a smaller extent.
Got it, sir. Thank you.
Thank you. The next follow-up question is from the line of Kunal Mehta from Pineapple Capital Advisors. Please go ahead. Mr. Kunal, I would request you to unmute your line and speak, please. Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Rakesh Banerjee from REP Capital. Please go ahead.
Sir, recently we came across one report from Ministry of Renewable Energy, whereby we found that there are around 30 gigawatts of renewable energy which are lying and yet to be used because no power purchase agreement has been signed. Now, in that context, we know that we have around 1.5 gigawatts of IPP forthcoming. So, do we have any definitive contract? If we have a definitive contract, is there any cancelability clause within that? So, wanted to have some color from you regarding that, especially considering the 30 gigawatt of excess capacity in IPP where PPA could not be signed with any discoms or other counterparts.
Yeah, Rakesh. Rakesh, if you see, we have 1.5 gigawatt where we have already signed the PPAs. So, and these are signed with GUNL, is one of the best paymaster, or you can say that is A rated into the discom if you compare with other discom. So, we are selective. We sign where we know that the counterparty is very strong and is cash rich. Then only we sign the PPAs with them so that we don't get into, because there is a lot of CapEx investment that has to be done. As far as IPP segment is concerned, I understand there is a 30 gigawatt, but we have to take decision depending upon the other factors like how much equity has to be infused, how much debt has to be taken, and how it will impact our profitability margin, or the ROC, ROE. That's what we have been hearing. So we have to trade between all these factors and then only take. But at present, we are comfortable enough with 1.5 gigawatt. As we start completing that slowly, we'll take a call on the availability of what extra is there in the in terms of the sector has to play.
Fine. That is the IPP.
Yeah. Rakesh, Dr. Alok Das also want to add.
So, just Rakesh, just to clarify that, rightly you have pointed out about 30 gigawatt. There is some sort of news there. Obviously, KPI, as Salimji was telling, that we are very determined for the local utility company where we are going for a bidding process and all. 30 gigawatt probably based on the market demand. Obviously, it could be a CTU connectivity where the power cell that agreement PSA is under discussion. Probably that could be a figure where 30 gigawatts are coming in the media.
Okay. And sir, regarding the IPP of 1.5 gigawatt that you're going to do, sir has already alluded that would be requiring around 4,000 crores of investments overall. And we see that this year 1,800 crores has been already invested. Our bank balance or cash equivalent is almost around 597 crores. So which makes it 2,400 crores. So what is the source of the rest of the 1,600 crores? How company is planning to bring this additional 1,600 crores to complete this IPP project?
Yeah. So Rajesh, we have already infused the equity portion, or we already have equity portion that is the 25%. We go with a mix of 75-25, 75 as a debt and 25 as an equity portion. So for the rest of the 75, we already have in principle sanction from some of the top lenders of the Indian economy, you can say, or infrastructure lenders which are there. So we are quite confident that we will be able to get these funds also released in a short period.
Thank you. The next question is from the line of Samrat Shah, who is an individual investor. Please go ahead.
Good evening, sir. Congratulations achieving 100 crore plus PAT for a quarter, and it is a tremendous achievement for investors like me that have been invested in this company since 180 crore of market cap, and now the company has grown up to 8,000 crore. So it gives me a great pleasure. Congratulations for that, sir.
Thank you, Samrat. Thanks for the very good word.
I have a couple of questions, sir. Firstly, regarding if you see the 2020-2021 interviews of Farooq Bhai, he has told that you would be achieving 1 gigawatt of capacity by calendar year 2025, which is this year. So out of that, you've done 9 as per the investor PPT. So whether that 1 gigawatt would be achieved as guided is my first question in this calendar.
Yeah. Let me answer your first question. What Dr. Farooq Patel always speaks about at a group level, like 10 gigawatt is also spoken at group level. So 1 gigawatt which he spoke at the time was at group level. So we have already, at a group level, we have already surpassed that long back in FY24 itself. So the commitment usually is at a group level that we have done. Yeah, your second question?
Okay. Yeah, second question was on, sir, the risk associated with this business. The context is a couple of months back, there was a PAC filing that 66 megawatts order got cancelled from Sai Bandhan Infinium. I wanted to know not about this particular company, just the reasons by which for which an order gets cancelled. Like because you have long-term PPAs so the orders are not easily cancelable. So how can we expect an order to get cancelled, or is it just a one-off case?
See, Sai Bandhan was not an IPP project. There was no PPA signed. It was an EPC project. Okay, so we call it as a CPP. Sai Bandhan, whatever we cancelled it from our side because of the issues on the designing side. The customer changed the design, and there were issues on his funding because he was tying up for a funding and the financial closure was not happening. So we didn't want to get stuck in the middle where we have completed a part of the project and the entire project is held because of his incapability of raising funds for his project. So that's the reason we saw that it is not forthcoming in a proper way. So we said that we should cancel this order, and this is one of the order that we have cancelled because on account of the end use customers' inability to raise the funds and other factors.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Ritvik Chauhan for closing comments.
Thank you, Tejal, and once again, I'd like to thank all the investors and participants who joined us on this call. We're very pleased to have had a very strong quarter and a strong year. Thanks again to our Group CEO, Dr. Alok Das, and our Group CFO, Salim Yahoo, for taking us through this. Please reach out to us in case you have any further questions. We'll see you again soon.
Thank you. On behalf of Share India Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.